In this video, we're going to go over the history of Link on the 12-hour bars, and we're going to watch over time how this compares to our bull market watch trading signals. So what I'm using here is the replay option over on TradingView, and I'm going to go back to July the 10th, the very day that we started doing this data collection for the bull market watch for Binance. And on this day, this is the price action that we saw. We're going to follow along on the side panel here, and it'll show us what we had for a grading for our trading signals for Link throughout this time. You can already see ahead from July 10th all the way to August 12th. And as this plays forward, I will slide the spreadsheet along so that we can continue to watch the color coding change as the market unplays. And I'll explain the formations that we are trading as we're going along for these trading signals, so that if you are opting into our trading signals, you know what they're based on, so that you're not trading blindly when a signal comes out, but you really understand the entire system that is based on these trading signals. Once you understand it, you can really see how powerful this is. So let's turn this on and start playing through. So every so often now it's going to play through, and I'm going to leave my cursor here so that we can see the date that it is running at right now, and then I'll just comment as it goes along. So we can see here that our grading scale is putting it at near fail, which is nearly going down to new lows on a downtrend. And we can see it goes neutral, which means it's not really going down as it's pulling up a bit there. And then as it starts to break down to new lows, we're seeing the near fail status. Then it goes back to neutral. Then it goes back into almost an alert status there as it pops up. But prices continued to pull back, so it didn't get us into a hold status. And what's the date here? August 26th. Let me pull this ahead now so that we are watching what's going on here in September as this unfolds. So we're on September now, and I'll put my cursor back here. September 7th, we can see things are going down and making fails and near fails. As the prices are going down to new lows, we're marking those out. And then it catches a bottom, and from September 19th until October the 1st, we're warming up. We see our bottom formation is almost in place. Here it is on October the 2nd that the signal comes in that it breaks high enough that we've got in officially. Can't deny it now. It was actually a little earlier, but that was okay for this to be a little safe. So now we have got in on this move throughout October. On the 14th of October there, as we're moving along. And as prices come back in October, we can see that the exponential moving averages crossed over on the 4-hour time frame on the 27th of October, and part of our trade closed. And then the trade continued on. We can see here we are in November, and I'll pull this along so that we can watch along what's going on November the 12th. We are back into a hold stance as prices move back up out of that 1, 2, 3 formation again. And yet on the 23rd, it had topped out enough on the 4-hour exponential moving average that it gave us one of our exit signals. And so now we're watching along, and on the 30th of November, the 12-hour exponential moving average also crossed over, giving us another one of our exit signals there. And we can see that the price charts in our as we follow along, it just stays neutral all the way along through here now, as prices are not making the 1, 2, 3 formation that we can trade. So it continues down, continues staying neutral in our charts, which means that there's nothing for us to do but continue to watch this specific market as time is going along. So time goes through, time goes on, and we can see here January as things are setting up. January 8th, we see this bottom formation setting up now, and our trading signal is coming into play. And there we are. We're in hold status here on the 19th of January. It comes up that we have the big enough 1, 2, 3 formation that this gets us into it. And we're going to hold this now that the 12-hour EMA crossed until the 4-hour EMA crosses and kicks us out of the trade. But we do want to pay attention on that 4-hour EMA. It is noisy. So back in February, we are already prepared to get back into that trade when the 4-hour EMA crosses over. And there we are. We're long in this trade again at the perfect times as things are taking off. We've already got our positions, made some really nice grabs on this, And we're ready all the time without prejudice because this system is very mechanical. As the 4-hour exponential moving averages cross, part of our trade is to close out. And if those 4-hour EMAs cross positive again, we get back in. The system just continues to monitor it for us. So again, we're coming up into February, into the beginning of March. We know that things started to crash just because of the fear of coronavirus. Now prices have come back and the EMAs have crossed so that they've kicked us out of these trades, and we closed those trades. We're not holding on to this as prices have come down. The fantastic part of this trade is not the entries, but knowing that you have a clear, unemotional, measurable way to know exactly when you're going to get out. So this system takes care of getting us in as it's setting up, and also takes care of getting us out as things are setting up the other way. So here now in April, I'll move it ahead. We can see that it grabbed this as the bottom formation took off. We are already in hold stance and watching now on the 19th of April to see what goes on next. We are at a potential double top. This is a place to be watching for a 1, 2, 3 top at this point. And when the 4-hour EMA exits, it would be a good time to get out of this. And especially when the 12-hour EMAs exit. So I hope you found this history of how our trading system follows along with these different trades interesting. I'll do more of these so that we can follow through the entire trading plan with another market and see how these exponential moving averages combine with the 1, 2, 3 formations to get us into the trade at the bottom when it's good to get in, and it gets us out at the top when we're out of steam and it's time to take our profits and not be a bag holder. Thanks again so much for watching this video on Link. Be sure to hit the thumbs up button and subscribe for more of these training videos. Cheers. Best of luck. Stay healthy. Bye for now.